Hi everyone, welcome to Weekly Market Insights from Traderz Hut. I am your RV, Raju Angadi Vishwanath, the SEBi registered research analyst. Come, let's have a sneak into the trade setups for the equities and have a glance into the commodities for the third week of April 2024. Interesting times are ahead. A war has started in the Israel versus Iran in the start of the weekend, like from the last Friday on the 12th, the initiation has happened and the markets are on a shaky note. What the charts are hinting? Weekly charts, shooting star in Nifty, clearly hinting a pause of a or a halt of a uptrend. We'll get a further confirmation. Let's see the other indexes also, what pattern it's forming on the candles. Again, a shooting star in the bank nifty, fin nifty as well. We are seeing a shooting star, hanging man on the mid cap nifty. Sensex has formed a shooting star pattern on the single candles, while the auto and the reality index also has formed a shooting star candles. Let's have a sneak into those charts as well. Auto unable to sustain the highs. What do you call it as a shooting star? Means when the price opens and moves higher, unable to sustain the higher levels and almost comes and closes near the open, we call it as a shooting star candle pattern. That's what we call it as. Real estate also we are seeing a shooting star on a weekly candles. Pharma within a channel has reversed, unable to sustain the higher end of the channel. IT and FMCG looks to be on a weaker note, where we are seeing a bigger kind of a reversal. The weakest sectors are IT and FMCG, already on a lower top confirmation kind of a patterns formed in the index. So what to do, how to trade the Nifty? Let's come to the shorter time frame. What's happening with the Nifty? In a larger time frame, I'm going to tell you why 22,775 is important. It's a 150% of the extension of the Nifty, which is a super cycle degree, wave 3 of 3, which could have been completed unless we take out 22,775 on a decisive basis. Markets could be headed on the downward trajectory. If we take out that level, then we can head higher towards 24,000 zones in the Nifty. The probability of that as of now seems to be on a weaker trajectory or not on the positive front. So watch out. The completion of the wave 3 of 3 could be on cards and correction may have started for the markets before we head higher. So that's the view on the Nifty on a larger degree. Now coming to the daily analysis for the Nifty. So short on a shorter time frame note, we have taken a 2 hours chart. So Nifty is forming a ending diagonal pattern, which is a overlapping pattern, and the fall could be faster comparatively. The shorter time frame trend also has been broken. We are seeing a trend line break down. 26, 640, 650 has been taken out on the downside. The close in the last week is 22,519. Now there might be a gap down opening on the start of the week on the Monday due to the war scenario. What are the supports for the Nifty to watch out? 22,420 and 22,340 would be the support zones. So watch out these levels: 22,420 and 340. 22,340 below 22,165 and 22,050 levels can be tested. In the Nifty, the fall would be shift as we have formed the ending diagonal and the breakdown has happened. Rises should clearly be a great opportunity if we hold 22,420 to 340 levels. There can be one bounce towards 22,555, 600 and 660 levels. 22,660 levels. If we get 600 to 660, great opportunity to sell the markets. That would be an ideal opportunity on any bounce back or a reversal, as the result season undercurrent is also on the way. How the market should react, mostly the trend seems to be on the shorter sides as per the charts where the Nifty is hinting. So watch out the levels, use the rises to sell. That would be the strategy. Data also hints 22,600 to 700. Aggressive call rating is seen, while 22,200 some foot for the base is built, so that could act as a support as per the weekly data. So that's what the charts are currently hinting and the data is well. So strategy is clear: sell the rises. Unless we take out 22,650 to 680 levels, sell the rises on the market. 22,723 as the stop loss, one can sell the Nifty on any rises. What to do if it gaps down? Obviously, any intraday rises around 22,420. If it holds and bounce back towards 22,500 or 560 levels, one can sell the Nifty. What about the Bank Nifty? Well, Bank Nifty seems to be on a bit of a stronger note as it has broken out the highs. The pullback, if it sustains at 48,300 levels to 48,100 levels, then it holds to be good. Like around we are closed at 48,564. So that would be the key level to watch out. Now 48,800 and 49,000 calls have been written. 48,500 and 48,000 put base we need to watch out on the Bank Nifty as per the OI data. So 48,700 and 830 holds to be the resistance for the Bank Nifty. Unless we take out those levels, we are not long on the Bank Nifty. So it's better we avoid the banks as of now, or some rises would be sold. 48,475 is one support. Below that 48,250 and 48,100 holds to be the support. Until 48,000 holds, it is good. If it breaks, then we are heading down for the 47,700 and the crash. 47,700 below crash would take a bigger note, and we are going to see the different downside levels for the Bank Nifty. So that's on the Bank Nifty note. Now we are watching out on the Fin Nifty. Fin Nifty 21,400 and 21,300 holds to be the support. 21,200 below the major reversal would come. So watch out the levels. 21,400 and 300 are the short term supports, and 21,200 below the reversal would occur. The same shooting star is formed. Again, we are seeing the principle of equality which the charts are hinting. So 21,662, 21,662 becomes a resistance. 600 and 662 becomes a resistance for the Fin Nifty. Sell the rises would be the strategy unless 21,750, 740 is crossed, and on the downside 21,400, 21,200 levels can be revisited. Below that we are going to see the next kind of a sell off. Mid cap nifty, well, the pullback seems to be in a corrective phase. 11,050 until it is crossed, we are not out of the woods. 10,830 and 10,700 holds to be the support zone for the mid cap nifty. If it's a corrective advance 10,700 breaks, then we are going to get weak on the mid cap nifty. So watch out the levels accordingly as discussed for the mid cap nifty. Well, how to trade the Sensex? Similar to the Nifty, Sensex is forming a clear divergent ending diagonal. We have seen a clear divergent ending diagonal pattern in the Sensex where the corrective advance has formed, and in a overlapping fashion the ending diagonal is getting terminated. So a long legged candle is formed on a daily note on the Friday session, the bear candle, unless 74,500, 74,700 crosses on the Sensex with the 74,900 as a stop, one can sell the Sensex for the lower levels for targets of 73,000 at least on the cards. Well, what happens if it gaps down 73,600, 73,500 first support, then a bounce back towards 74,000, 74,350 levels would be an ideal opportunity to sell, and we are heading lower on the Sensex as well, as it looks clearly on the charts the ending diagonal has been completed. IT and FMCG weak as the charts hint the consolidation and the crack would come as per the charts. So watch out these sectors. So basically this is the sectorial analysis on the overall front. In a broader view, what we have discussed for the week overall, how to trade the different sectors is what we have discussed. Before getting into the stocks of the week, if you like our video, do subscribe to our YouTube channel Traderz Hut. Also follow us on the Twitter and the Facebook handle as given in the description below. If you would like to join our Traderz Hut community, the free trading insights and daily market analysis videos, you got a link below in our Telegram channel for the regular updates on the research. And also if you'd like to know about our premium services on the SEBi registered advisory as well as the exclusive options on the options data workshop, contact us on the contact details below, and the link below the more details have been provided, so you can go through that and get in touch with us. Let's come back to the stocks of the week. Mahindra and Mahindra looks to be on an ending diagonal note. Maybe the last leg might be there, or else it might have completed. 2,200 could be on the cards on small dip. So 2020, 2000 levels, once it is taken out, or 1970 is taken out, the stock is clearly on the downward trajectory. The same pattern in the Sensex and the Nifty has been formed. Weakest stock in the FMCG pack, Britannia Industries, where if it breaks below 2740, we are headed towards 2620, and 2620 is taken out, the stock is clearly headed towards, sorry, 4740 below. Sell the Britannia Industries for 4,660, and 4,620 below we are headed towards 4,300 levels on the Britannia. So more likely 4,300 levels are expected. 4,820 to 850 becomes a major resistance for the Britannia Industries. Sell CMP to rises. HCL Tech has got weaker on the charts. Let's see the charts of the HCL Tech, how it is panning out. If the stock breaks below 1518 and 1507 levels, 1507 breaks, stock is headed towards 1460 and 1420 levels. So HCL Tech weak on charts. Watch out, 1460 to 1420 levels are coming. One more stock which is looking weak on the charts, Titan, broken below 3740. So now on a downward channel trajectory, stock is at least headed towards 3400 or 3350 levels. Any raises would be sold until the stock takes out 3720 levels. Now 3650 to 670, 680 levels was ideal opportunity to sell. Immediate target 3540. Positional target 3400 levels at least is on the cards. Titan looking weak. Sell the rises. Hero Motocorp again getting weaker on the charts. At least for the short term, stock looks to be on a corrective note. 4500, 540 levels holds to be the resistance zones for the Hero Motocorp. We are heading on the downward trajectory for 4150 levels. So 300 points downside and 100 points upside risk. 1:3 risk reward ratio makes it a viable trading option. 4200 to 4100 levels can be seen. 4570, 612 resistance. 4515 would be the SL for the Hero Motocorp. Stop loss, I mean, so looks good on the charts. Well, one more auto stock which looks precariously poised and the lower top has been formed. The stock looks weak on the charts. Is TVS Motors headed towards 1900, 1920 levels in the coming session. So 2100, 120 becomes a resistance for the Hero Motocorp. 2065 to 90 would be a selling opportunity for 1920, 900 levels, which is on the cards for the TVS Motors. While Chola Finance clearly 1220 to 1230, 1220 to 30 becomes a very good resistance for the stock. In the form of a right shoulder, we can pull back. The stock can head again on the downward trajectory towards 1100 and 1000 levels. Bharat Forge is one more stock which we see on a weaker note. Stock is been consolidating. The resistance of 1180 to 1200 levels is not getting crossed, and the lower levels of 1100, 120 to 100 breaks, we are heading much lower towards 1000 levels on the Bharat Forge. So on a weaker note, 1200 as a stop, one can short the Bharat Forge. So that's it on the stocks of the week. We have discussed a lot of stocks which are on the shorter side. On a selective note, let us get into the disclaimer part. I am Raju Angadi Vishwanath, a SEBi registered research analyst, short-term trader, do hold some certain positions in my own trades as a short-term trader, and also I do trade index and stock options as well. Disclaimer in the sense, stock market investments are subject to market risk. Please read the related documents carefully before trading or investing in the markets. Do consult your financial advisor, individual financial advisor, and do your own risk profiling analysis. This video is for the educational purpose. So that's it on the disclaimer part, and also on the weekly market insights. Signing off for now, your RV. Thank you very much.